Welcome everyone, Cashbright here, and in this video I'm talking about recession. What it is, what are its effects, and what it means for you. It's a term you will hear a lot during so-called economic downturns, so it's nice to have a solid understanding of the basics. So let's get going. Number 1. What is a recession? A recession literally refers to the economy receding, i.e. shrinking back from its current size. Think of the economy as a cake. In the bad times, the cake shrinks or recedes in size, and there is less of the cake to go around. In economics, the technical definition of a recession is 2 consecutive quarters of negative growth. This just means 6 continuous months where the economy's growth is negative. This is considered by economists as a clear sign that the economy is shrinking, and therefore in a recession. Number 2. What are the impacts of a recession? The impacts of a recession are both financial and social. With less of the cake to go around, people lose jobs and unemployment figures grow. Businesses and banks have less confidence in the markets, and are therefore resistant to spending money on employing people or investing in risky projects. Everyone is unsure of the future, and overall this leads to further falls in economic activity. And unless the government intervenes in the form of tax breaks, interest rate drops, or public spending, the recession can worsen. Recessions have horrible social impacts as well. Families of the recently unemployed struggle to make ends meet. Residential debts take their toll, and homelessness figures rise. The negative effects of a recession are numerous, and it's the job of every government to shield the country and to steer everyone out of it. Number 3. How do we all get out of a recession? The causes and effects of a recession can be complicated, and thus there is no simple answer. However, standard neoclassical economic theory suggests that market intervention is necessary. Central banks lower interest rates to encourage spending and discourage saving. This is because more spending by people and businesses will create more activity and therefore more economic growth. Governments will increase public spending to encourage higher employment levels and cut taxes for broadly the same reasons. But often factors are beyond the influence of governments, and the way out simply takes time and changes to occur elsewhere in the global economy. Number 4. What does a recession mean for you? This will depend. If you have a secure job and a decent standard of living, the effects won't be felt very much. Maybe if you have investments, you'll see a downturn, or even a complete loss of assets. Bad, but certainly not as bad as the person closer to the bottom of the socio-economic ladder. Those of us on temporary working contracts or in lower wage jobs will face a lot of sleepless nights worrying about tomorrow. Are you going to keep your job? What will you do if you are fired? Can you find another one in the current economic climate? How can you afford to pay your rent? Etc, etc, etc. It's in these kinds of times that budgeting and having a financial plan of action really matters. Thanks for watching. If you found this video helpful and would like to stay up to date with our future videos, please leave a like and hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.